Hi, sir. Good evening. Am I audible to you?
Yes, Prince, namaste to all of you. Many thanks, Prince, for organizing this. And आप सभी को many thanks
Sir,
for taking time out from your busy schedule. Thank you.
thank you so much, sir, and look forward to the great book from you. And during the course of this session, we'll be learning a lot of things from you, and definitely that is going to help our audience on both the fronts, be it investing and in their life. So, guys, without any further ado, let me take the moment to introduce our guest for today. So, today we have got Siddharth Rastogi, sir, Managing Director and Chief Operating Officer at Ambit Investment Management. Sir has got 22 plus years of experience across the domain of financial market. He has worked as a practitioner and very rich experience in that front. Apart from that, sir is a known public speaker wherein he puts in the motivational speeches and try to share the best side of his to the benefit of people who came across be it today's session or different facets of life. So recently, sir has, it was co-authored with Koushik Mohan, and the title of the book is The 100x Formula. So basically, that applies to both the investing as well as the life in general. So we'll be knowing from Sir. In your opening note, I request you like how you conceptualize the idea of writing this book. What was the starting point and how it fared, sir?
So, Prince, quite some time back, I wrote a book known as 8 Minute Decision. And the idea of that book concept, the concept of that book was that every person, every person who is born on this planet is born with a special purpose. It's not by chance that you're born to certain parents. It's not by chance that you're born in a certain geography. It's not by chance that you are born in a certain neighborhood. It's all by a universal plan. That's one premise. The second premise, whatever Prince is today, whatever Rahul is today, whatever Ashwini is today, whatever Karthik is today, whatever Rajesh is today, whatever Shrikant is today, whatever Siddhartha is today, it's because of the decisions one has taken through the lives. The decisions I have taken in last 45 years of my life, I'm an outcome of it. And when your decision making becomes conjoined with the providential decision making or the providential plan, then you reach your peak potential, you reach maximum, you reach the milestones which you have never envisaged. Unfortunately, that book didn't work. And since 2017, I've been thinking, how can we think about democratizing investing? How can we start envisaging about democratizing success? How can we start thinking about everyone winning? Unfortunately, what the capitalist world and everyone, whether it is our schools, whether it is our education system, whether it is our office, whether it is our environment, they always tell us of one very simple thing. You are running a race and you are running a race upward, which is a pyramid, which means only select few people can reach the top. Not everyone can reach the top. And who can reach the top? That 1% people. And what do that 1% people have already got? Either they are prodigy or gifted or extraordinarily talented. Number two, they are born in the coterie of corridors of power. They are connected to the coterie or they are moving in the corridors of power. Number three, if you get a good mentor, good teacher, good godfather early in life, then you will be successful. These are the three conditions which give you privilege to succeed. But what happens to those 99% people? What happens to those 99 others who have none of these three? Don't they have the right to win, right to make money, tons of money? You may have not got a choice to be born rich, but dying rich is definitely a choice. And that's what propelled me to start thinking, how can we solve for it? So that was the idea. And then me and Koushik, we collaborated, and then we derived a formula, and that's where the beginning was. And then we subsequently thought, is financial prowess the only thing? Is savings and investing the only thing which leads to success, which leads to happiness? Maybe something else as well. So then we probed further, then we delved further, and we saw that as soon as people cross the age of 40 or 45, they start dropping out from the corporate world. Irrespective of from which B school, from which college you are from, which education you have taken, as soon as you cross that 40-45 mark, you start dropping out from the corporate world. Why? Because you are not able to reach that CXO level. Irrespective, you are not able to reach. Because there are certain rules, there are certain methodologies, there are certain unsaid norms which the corporate world puts in. Certain things which your employer seeks, certain things which the board or the top management seeks from you. Are those rules written anywhere? The answer is no. They go beyond the delivery of numbers. They go beyond the delivery of targets. And if you are able to understand and imbibe those simple norms, and through practice you can use those tools, you will break that glass ceiling and reach the top. So that was the second aspect. And then the third aspect, entrepreneurship. Why do 30,000 products every year they just fail despite of marketing push, despite of PR, despite of money prowess? They fail. Why? Why do 98.5% entrepreneurs fail in their endeavors? Why do they not see, despite of they pivoting, despite of they doing everything, businesses fail? Why? Is there a methodology if they follow? Can they be successful entrepreneurs? Can they be unicorns? Then can they be unicorns? And that's the formula which we have tried to put in here. Solving all this, then comes the final thing. Can money buy happiness? Yes, money is very, very critical. Money is essential. If money is critical and essential, why do large families have unhappiness? Why is brother fighting against own brother? Why is father and son fighting along? Why is sister and brother? Why relationships get sour? After you get tons of money, after you have the best phones, best luxury items, does it make successful? Does that make you happy? Maybe momentarily. Maybe for a moment. But what is the answer to the long-term happiness? I call it bliss. I call it bliss in perpetuity. How do you quantify this bliss quotient? And we have tried to solve for it. So this is the concept of the book. And we thought that 99% of the people who are common people like me, I am not affluent, I am not born to very, very rich parents. I am born to honest parents, hard-working parents. And I thought that if I have learned anything in my 45 years of life, in my 44, 45 years of life, can I share with people? Can I share some experience of mine with everyone around me? And that was the purpose of this book.
Great, sir, and surely our audience must be looking forward to the nuances you just shared. So, coming to Kaushik, like when more than one people work on a common project, so it's kind of there are two sides to it. One is like bringing synergy, and other is like there are times like when we have difference of opinion, or maybe rather a better choice of word would be I mean seeing things differently. So in such cases, like how had been the journey working with sir, and some takeaways from the book you can also enumerate.
Sure, sure. Thanks, Prince, for the opportunity. And I should be really happy that I got a chance to write a book with Siddharth Rastogi, sir. So basically, how this, I would just give some background how we actually started writing this book, or like when it started. So, to be honest, it started in 2020 in the COVID duration. We had ample of time, and then I was talking to sir, and we had some other discussions for some other things. Then this book idea came into us, and also we were being approached by one of the publishers, and then we thought. Why can't we write a book, and why can't we think about other people, and how are we making money, and we wanted to pen it down all our success stories that we had it. So that's how basically, like, we had a formulas that we were thinking it was working out for us, and we were a selfish people, like, to be very honest. We did our own research, like, to see that where and all we can make money, how are the process that we can make money. And that's how we landed up with this formula. Like, we were looking at how durable is it, past also is working out for this. And then we started putting all the data that we had it with us, and then we run the back testing and all. It was working out. So then we thought, like, let's put the live money and put test this formula. And so, like, if you, whatever you see in the book and the concepts, whatever are there in, like it's been tried and tested for last 4 years with actual money. And also, if you see the chapter one, there is a character which it actually starts with. It's actually a true story. It's been inspired one of an person who has helped us a lot in this book. It has been inspired from that person, and then taken his story and converted to. We changed the names, and we changed the little bit characters and the scenarios, and then we added the entire story. That's how the story evolved. And then we had an breaks in multiple times. We had a lot of conversations. We had lot of discussions. We met a lot of people to understand more concepts. We let lot of promoters to understand what exactly worked in that duration for them, and why the post next 5 years were looking lucrative for them. So it was a very long journey, and it was a great experience to work with my co-author, sir, and also, like, trying to find this. And also, uh, ironically, we are making money with the concept. So it's something like money is also coming with what we have. And also, I'm not so educated to tell, like, how it is in the relationship or how it is in the other part of the life. So that's where Siddharth sir, with his experience, has come and played a very big role in this. So it's like it's a book where you can actually it some of the other scenario you can correlate for yourself. And this book actually talks about how you are thinking for yourself, and how other person should think for himself, like how the relationship should work. And the title also, like, so we had a very much long discussions for the title. We were thinking something in a different format, and then we thought, like, why are we writing this book, and for what purpose are we writing? A lot of people think, like, they wanted to be the number one. And then we were like, for being number one, what is the source? Like, if anyone thinks, like, to be number one, he have to step on other person and climb the ladder. But that was not our approach. So then we thought, like, how a person can think about being his one of the hundredth best person of himself. Then that's where we took this name as the 100x formula. And also, luckily, our entire formulas and our back-tested numbers were also slightly giving more than 100x as in the 20-year duration. So we landed up with the name. Wealth creation is something that every person should take care. It's like, for example, like, my couple of friends are also in the call, so they also know that there is one number, specific number in mental number, that everyone will have in their mind. Post having that number in your portfolio, or like anything, like in your net worth, it doesn't matter how much you earn. it actually matters like how you'll start respecting what is the relationship. You'll start respecting what is the entrepreneurship. You'll start respecting your other work. And we wanted to sort it. We wanted a solution that if you can solve for your money and what is that post that you can actually lead the life. And we wanted to show you the nirvana path, what it is like. We wanted to just add a value to your nirvana path, and that's how this entire book came into existence for us. And it was really great working with my colleagues also, like, and also there are a lot of people in different scenarios who came to us and like gave a lot of helps to us. Even in the penguin side, they were literally to be very honest, they were very patient. They were like giving lot of inputs. And we had it's like we are only two authors, but to be honest, it was like a lot of people contributed to be this book into your hands. So it's a long journey, lot of learning. And I think writing a book at this stage was something like an big learning for myself. And I had a lot of peaks and ups and downs in the same situation. I had some of an ideas like something like I wanted to start my own entrepreneurial journey. Like that also went on to be an on an height, and then it came down. So we saw a lot of journeys with together, and we learned a lot, and we saw so many things. It's like penning down everything was a very grateful experience for us. I think that carries same to Siddharth sir also. What do you think, sir, about you?
Absolutely, Kaushik. You said it. It was a so the first thing this book clearly taught me. I'm sure it also taught you that patience and patience pays. An absolute patience pays you extremely well. Something what we keep talking about in investing. It's exactly the same thing in your writing. Because if you're patient with your writing and you keep working on the details, you keep working on the minutest aspects, then obviously the product comes out well. And that's what we have seen with the book as well.
Great, sir. So, coming to a very important question, sir, there are many good books and there are n number of books which we all read in some part of our lives, but there has to be something differentiated in the sense like when one goes through a book, one can connect with a book, be it the investing side, or you can say you have talked about various aspects of maybe working on improving lives, working on career, etc. Right?
Right.
So, although you pointed out the basic premise around the book, but if I were to ask you few points wherein like where you think it stand out and it would be easy for the readers to gain maximum out of it.
So very important question and very pertinent, Prince, what you said. And what Kaushik articulated that most books, they look at one aspect of your life. So some books talk about your job motivation. Some book talks about success in entrepreneurship. Some books talk about money prowess, money success. Some books talk about your adolescence. Some books talk about your when you are growing old or when you're aging. This is a book which can help you in any aspect. So in under any situation you are in, and it will help you. The interesting part about this book is that this has been simplified for somebody who's 14 years old and somebody who's 44 years old and somebody who's 74 years old. This book has been depicted in a very simple format through the charts and pictures, and these pictures are self-explanatory. I will. So people talk about various how does one succeed in life, and one of the charts we have given in the book, which is on the 6th page, and it talks about very simple the sequence of success. And the sequence of success is what? The first is whenever you take the first step, what happens? You start thinking about risk. As soon as risk comes into your mind, what is the intuitive thing which comes? the fear. If you face your fears, you get confidence. And when you get that confidence, you take a step, you take an action. An action, then it leads to movement, and then movement leads to momentum, and then momentum leads to success. Another thing, a quote which I'm saying from the book itself. Fear is better than regret. Fear is better than regret, because whenever you try something new, whenever you step out of your comfort zone, when you step out of your complacency, the first thing you do is you experience fear. And fear is better. Fear is better than regret. Why? Because fear arises when one tries. Regret occurs when one gives up. Which one will you choose? So what are we saying is, this is a book if you want to start something new, or if you want to have behavioral aspect in investing. Very, very simple. Behavioral aspect in investing, and I'll read one of the quote from the book, which is on the which is from the chapter 4, and it talks about cash is real, cash is real, the rest can all be cooked up. The rest can all be cooked up. And this is the thing which we have spoken also in the formula, where we have focused on the cash flows, where we have evaluated the cash flows very, very closely. People talk about various numbers, but the first aspect is cash flow. So from the motivation to the investing, and then you have the corporate, how do you succeed? How do you succeed in the corporate world? And there is another interesting quote which I'm using from the chapter 5. Everyone chases and claims to employ logic, yet they act and react emotionally. And everyone chases and claims to employ logic, yet they react emotionally. And if the person in the corporate world understands that, obviously you can be very, very successful. People quit not because of money, work, pressure, or results, but because of their environment. And if employers understand that, they can surely build successful business. So what we are trying to say is, this book is unique because, as Koushik mentioned, that it will touch, it will resonate in some way or the other, irrespective of the step or the path you have taken, or irrespective of the milestone you are at in your life journey. And that's what makes this book unique. Number 2 is, this book is not about preaching, you should do this, you should do that. No. Every thought, what is a thought? Thought is nothing but a bout of energy. It's a sudden gush of energy which comes, and this thought, if it is not translated into courage and then action, then this thought gets dissolved. But after taking that action, another interesting aspect which you have to take care is that you should measure it. Are you measuring? So a lot of people talk about financial quotient. Absolutely. You should measure your financial quotient, but are you doing it? So we have given a formula. Koushik and I have given a formula where you measure your financial prowess year after year, exactly how you can make the format. But after that, are you measuring your bliss quotient? Are you measuring your happiness quotient? Every year your net worth is rising, but is your happiness quotient, is your bliss quotient rising? That's what we have also spoken about. Is your action turning into positive impact or into negative impact? So that's what we have also spoken about in the book.
Great. And one thing I think majority of the participants or the
Prince, I will just try to add one part over here. Like I just wanted, we were waiting, is it like let the people read and then come with their questions on this exactly about how they can solve for their saving, like for their investing or something. Like I would just go and reveal. Like we were thinking, like we'll not do that until the time like we get it. But I will just go there. It's directly from the chapter 4 what we're talking about. It's a formula which we developed with the back testing of more than 25 years plus, and then actual money tested for for the last 4 years. This is a formula which is having created wealth for us, which is proven factor for a shorter duration, but we understand it is only for the COVID. But let me iterate how this entire formula works out here. Let me give you if any scenario, if anyone an investor wants to think about investing, the first thing that he asks for himself is that how much is the sales going to increase, and then he tells that how much is my PAT increasing. Okay, let this PAT be, let me give one P multiple, and this is my exit value. That's how the entire valuation works out, right? But let me tell you how we have derived with our numbers. First thing and the most important thing, like Siddharth sir was quoting from the chapter 4, the code, cash is the reality. Anything else is like anything else can be first. That's the ultimate truth that what we are believing in this. So that's the reason what we are talking about is cash flow from operations in year one should be greater than cash flow from operations in year zero. That is the last year. So you have to take any one of the year as a base year and you have to calculate your cash flow from operations. And it's very simple. Like a lot of people try to do the mathematics like EBITDA minus plus or minus working capital changes, and then they come up with plus non-cash items, right? We are not even telling like don't go with that long entire formula. Just very simple. Just go take your net profit, add the depreciation amount for it, and plus or minus working capital changes, which you see need to see it from the year zero, and you need to see it from the year one. This is the simplest formula that you can use it for the cash flow from operations. Just calculate your cash flow from operations from for the last 5 years, and just see that is it growing? Is it growing with what percentage? We don't have any percentage. That depends on the person to person. How much our percentage he needs, he can put it. But if it is growing, that means that ultimately the meaning of this entire statement is that the real happening on the sales growth is happening and the real earnings is happening, or like there has been some kind of operational improvement, and that's the reason cash flows are becoming positive. So if you see in the listed space of 4,500 plus companies, you will only find almost around 450 companies passing our first level of test. Then comes the strongest pillar, or the second pillar that we wanted to see, that cash flow from operations divided by EBIT. A lot of people take it here as EBITDA, but what we are talking about is EBIT. What we are putting as a criteria is the 60 percentage mark. The reason that we left with other 40%, we wanted to give this money for the working capital needs what the company is having for. So some cash might be stuck up in receivables, some cash might be in inventory, some cash might be in the payables, and that's the reason we are coming with this deriving with the 60%. If you put the first formula and then you put the second formula, cash flow from operations divided by EBIT greater than 60 percentage for the last 5 years, in this 400 companies or 450 companies in the first formula, whatever comes out, lands up with us, it is just very just 250 companies. Then we have the another pillar of the formula, that is EBT divided by total capital employed. This is something like an ROC formula, but why are we taking EBT? Because interest is also an expense that we have it, which is going to be for the time till that time that I have the debt. So I just wanted to see how much actually my company is earning for an equity shareholder before the government earns. That's what EBT divided by total capital employed. In capital employed also we are very simple. We are just telling that take equity portion of your balance sheet. If you just get into the balance sheet to take the total net worth, just take or else just take the total liability or like total asset. Anything, everything is like LHS is equal to RHS. So that entire formula works out in this format. So take the total capital employed, and we are telling like it should be greater than 12%. The reason why we are coming up with 12%, right? it's very simple for us. The reason to be on 12 percentage. India is long-term growth is growing at 6% is what we believe. And in a longer term basis, India is having an inflation of 6%. When we club both of them, they come to be 12%. And that's simple, that what we're talking about. If EBT divided by total capital employed being greater than 12%, and you know how many companies are passing our test with 450 companies in the Formula One, and in the Formula Two, it landed up to be around 212 to 250 companies. In the third formula, we are landed up with just little as 150 companies. And then comes the strongest pillar of our formula. See, if you take a table, if it is not having four pillars, right, the table will not be so strong. If you have three pillars, it will stand. But what happens is that the table space of the table, the pie of the or entire industry should be very small. If it is having the four pillar, it will strong, very very strong. It's like how much ever length or the width or anything you have, still it stands as strong. And the fourth formula, what we have it right, lot of companies pass even the first three, but the fourth formula is very difficult to pass. And something that's where you need to tweak in as per your risk appetite and this fourth formula. And simple thing what we are talking about in fourth formula is that trailing year CFO divided by current market cap. It's like if I have 100 rupees, if I have around 100 rupees or my cash flow from operations in the current year divided by uh, total market cap is what I have it for the current day. If I get this number to be greater than 15%, that means my cash yield as per today's market cap being greater than 15% is what we are falling for. You can change this number. It's very, very strict on this number. I know that very less companies pass on this, and there are companies, at least in a year, you will get at least around 30 to 40 companies in their some of the pricing cycle in a full year, you will get a chance to buy them. But if you wanted to be slightly on valuations on an slightly on a liberal manner, you can change this number to be 10%. You can change it to as per your own needs. If you put these formulas, and for example, if someone is working in some organizations or like anyone like employees, and they just wanted, or like even an entrepreneur just wants to invest in the market, and if he just follows our formulas and with our numbers given, he have to just rank. It's very simple. Again, you cannot change the sequence of the formula. Also, you have to go step by step only. The same format you have to go. And if you put this formula and then check, and if you land up with somewhere around 15 to 25 companies or 30 companies in a year, so you invest equal amount over there. There is nothing called as like you need to invest 100 rupees in one place, 200 rupees in another place. Like it's not like 10% or 20% or 30% in one company which you are liking or not. You just go and invest equal amount and then see the kind of the returns that you are getting. That's the formula which we have run for our own capital, and it has been successfully running for us. And the second thing, if you wanted, if you can follow our entire process and from step one, step two, and step three, and the companies that you are landing up, you can start doing more deep dive into them. You can do factory visits for them. You can go and talk to the management. You can do and talk to the suppliers, dealers, and employees, also the competitors, and then understand the entire sector. And you can then understand what is happening in the entire scenario, and then come and put your fourth formula for the valuation, and then come and go invest. That means that you are outperforming for yourself. There are a lot of mutual funds. There are a lot of PMS. There is a lot of every asset class that you have it right. This has beaten, matlab, our formula has beaten this asset class in the last 25 years at any given point of time in a rolling period of 5 years zone. And also in an exit side, right? We have a very strict rule on the exit side. Exit is very simple. Once the portfolio has been invested today, every fifth year you need to come out of the portfolio and you have to invest in the new portfolio that has been generated in the fifth year. That's so simple is this what entire book is talking about. And one condition we have iterated in the start place is that we have taken any market cap below 100 crores cannot be working out. This formula will not work out for any market cap below 100 crores. That's the only conditions that we have it. If you run this formula, you will see what is happening. Also, like if you want this data on a free access. We have all the portfolios in our appendix chapter. We have also explained how we formed this step one, and what is the thesis behind it, why did we come up with it, and some examples what it actually live gave it to us. And then why did we come up with the second formula, how did we come up, and what is the story behind it. Everything is explained in the appendix. It's like appendix is oneself and a complete chapter, and it's like oneself and a complete book. And then if you're reading chapter 4 and appendix, right, I think for investing you'll be actually sorted for. So our entire book major crisis major thesis stands in the chapter 4 and as well as appendix. So then with these two chapters, and if you come to the chapter 9, that is financial planning, as per your for example, every life stage has its own different style of financial planning. For a woman, every different style of different stage of the life, they have a different plan. So we have also explained that one over here. And I think Siddharth sir was having an opportunity with TV, I think with Tata. So that's where the originating of this entire financial planning came up, and then we incorporated in our book. If you go through these three chapters, mota, you will be like sorted for your investing side, and you can think about how you can reach to your like for example, anyone like in India having an 100 crore portfolio, it's way easy. Let me be very honest, it's way easy. If you have a 10 lakh rupees with you in the age of 25, in the age of 60, if you have 25 percentage growth rate, the having a 100 crore portfolio is way easy. That simple is actually creating wealth in India. Not only in India, it can also work in different countries, but we haven't tried it in different countries. This is only our formula has been back tested with Indian numbers, and our formula is also been backed with the money that we are running on it. So this is the story that we had it for this entire book. And then it comes like how we wanted to collaborate with this entire philosophy with entrepreneurship. We wanted to collaborate with the relationship, then we wanted to collaborate with the corporate life, and that's where we entirely correlated the entire book with the other format of this thing. And also I'll give one simple example, like I was mentioning in the previous talk also. We have an example in the book which is one of the true story which happened, like you can see it till this story evolving with all the chapters, that entire character goes on. So this one character, like what I'm talking about, his net worth when he started investing coming to market, I think it was zero, and it was like even probably negative than zero. When he started learning and when he started his job, his first job, employed job, gave him 7,000 rupees. That was his salary. Today, let me be very proud to tell that his net worth is 50 lakh. That's the kind of impact that it is created on people. So I would love if people can give us more feedback and more learning on this. Like we would love to even make it more bigger. And also we are planning to get our own website on this and then put the inputs, and we wanted to write blogs on entire format. So yes, anything Siddharth you wanted to add, and then we can go for directly for the questions, Prince.
No, it's
So,
fine. What you have explained is superb, and what I can only say that this formula is not a recommendation. This formula is not a is not foolproof. The idea is, as Koushik rightly said, you should do your due diligence. There can be sometimes there can be errors. What we are trying to do is to simplify investing for each one of you. Number two is do your due diligence. Ensure that the money which you are investing is being tracked and is being followed. We all work so hard for the money, but when we invest, we take seconds to invest. We don't even Sometimes we don't even know the businesses which we are investing. Sometimes we don't even know the promoters. Sometimes we don't even know the line of business. And despite that, we go ahead and invest. So the only suggestion is all the formulas which have worked in the past may or may not work in the future. However, do your due diligence. It will simplify investing for you. That's number one. Number two is what we have done is try and ensure that you buy the businesses at the right price, because if you buy businesses at frothy prices, there can be chances that you can lose money as well. And equity investing is always a patient game with prudence, with lots and lots of prudence, because if you are in a hurry and without being prudent with your research, with your understanding, things can be fatal, because remember, it's your hard earned money. And unfortunately, there is no shortcuts, no small steps which can lead to big wealth. You have to toil, you have to put effort, you have to take that route, take that path, and then only you will succeed. And there will be times when you will feel the fear when the markets are correcting. Yet you have to remain invested. You have to go back to the notes which you have made when you have researched the company. Because your conviction during bad times should be reinforced. And that's only you will remain invested. Otherwise, you will be fearful and you will take wrong decisions. So that's it from my end. Prince, any other questions, or happy to
Yeah,
answer
yes,
any other?
Siddharth. So,
Yes.
two aspects, like you talked about why move from 1 to 100 and not from 100 to 1. That is one. And you have also talked about plugging the leaks in the book. So I would request if you can brief us more on these two aspects, and that would be helpful.
Sure. So what do you mean by moving from 1 to 100? Generally, when people look at life, what do? You are at the bottom of the pyramid, and we spoke about it early in the conversation, and everybody wants to get into that race of number one. Everybody wants to climb up the hill. Everybody wants to climb up the mountain. And at the mountain peak, you are lonely. You are only one. However, what if 100 out of 100 people become 100 times, grow, and reach their peak potential? So think about it. When a drop moves into an ocean, doesn't the drop become the ocean itself? Can you distinguish between ocean and the drop? The answer is no. Then why think of a mountain? Why can't you think about becoming an ocean? And that's what this book, we have tried to say, that you don't have to compete. You don't have to compete. When you can do things by collaboration. What are you and me doing right now? We have collaborated with each other. What am I doing with Gaurav? What am I doing with Rakesh? What am I doing with Saurabh? What am I doing with Sumit? I am getting the joy of expression. They are getting the joy of listening. I am transferring our experiences, Kaushik's and and my experiences, to the audience. This is the joy. Maybe someday some of you will be having some conversation with me where I will learn. So the idea is, can the collective well-being be higher than the individual well-being? So that's what we are saying. That's what we are saying. Why should you think of becoming number one? And we have given ample examples in the book. People think very, very highly of Shivaji Maharaj. Shivaji Maharaj was one of the greatest rulers, one of the greatest kings of all times of Bharat. And he ensured that the entire Akhand Bharat was created. But did he do alone? He had several people who collaborated with him. Some people were much more stronger than him. Some people were much more mightier than him. They all collaborated. They all had a common purpose of Bharat, Akhand Bharat. And that's what they created. So the idea is, if you have a larger goal in life for yourself and for the others' well-being, everybody will prosper. So that's what we are saying, from 100 to 1 or 1 to 100. So we profess that you should become 1 to 100 in your potential and in giving back to others as well. So that's the number one. Number two is leakage. Very, very interesting. Very, very interesting aspect you spoke about leakage. Now, how does leakage happen generally in life? Leakage happens in three formats. The first kind of leakage, which we all know, happens because of the money. The second happens because of our attention span. And the third kind of leakage happens in the goods we buy. So let me speak about the leakage in the financial system. Now, every time you churn, you automatically end up paying more taxes, you end up paying more brokerage, end up paying more charges, more costs. And that's how the leakage happens. You don't realize that small leakages, when they compound, they obviously turn out to be a very, very larger very, very big number. And you can do yourself the compounding at 19% versus 21%, a difference of only 2%. And over 20 years, that difference can be humongous. It can be very, very, very large. In percentage terms, it can be as high as 45%. It can be very large. So that's the one leakage which you should do, which you should not do, which is leakage by extraordinary churn, by constantly moving money from one place to another. You should rather think about investments. And when you're thinking about investments, do your due diligence before, pardon my language, when things go bad, when nonsense hits the roof, then you should not start thinking, oh, I invested in this. You should do your due diligence in advance. And as I mentioned earlier in the conversation, when you are doing your due diligence, please make notes. And when you're making notes and when things go wrong, please think and go back to those notes and check whether my thesis was right or whether my thesis was wrong. So that's the number one leakage. The second kind of leakage, when I say, is of time. Now, unfortunately, we all believe that we have infinite time. Unfortunately, we don't have. We have finite time on this planet. On an average, it's very interesting that only 7% of the people cross the age of 70 on this planet. So we have 800 crore people, only 7% of the people cross the age of 70. Only 14% of the people cross the age of 60. Only 24% of the people cross the age of 45. So we have limited time on this planet. And now where are you investing this time? Are you investing time to seek that happiness? Or are you investing this time to burn relationships, to feel sad, to do wrong things? If you're consuming bad data, if you're consuming bad concepts, if you're watching or seeing bad things, what are you doing? You are leaking your time, because what's happening? You could have done very, very constructive, and that could have given you a multiplier effect in your happiness, in your things, in your well-being. But what you do, if you consume anything in terms of your time, you spend anything which is not productive for you, you are leaking. So that's number two. Number three kind of leakage, and it is very interesting. What is the third leakage? Is the products. Now, I'll give you a simple example. You may think that I should have a great car, which is maybe a BMW 7 Series. Yes, why not? And I can have a comfortable car which may cost me 18 lakhs, 15 lakhs, and I may have a BMW 7 Series. Yes, absolutely. BMW 7 Series gives you that kick in life. But what happens when you own something which is very, very precious? It will give you a moment of happiness. And at that point in time, the cost which you're paying in terms of your decision making is very low. But when that car gets a scratch, your happiness quotient goes down very, very drastically. Similarly, generally what happens with people, and this is a very interesting quote and everybody should listen, and I will repeat it for everyone, and please make a note if you're ever confused whether you should buy something or not. So generally people buy things which they don't need. Generally, people end up buying things which they don't need to impress people they don't like. Generally, people buy things which they don't like, people generally own things which they don't need to impress people whom they don't like. So the concept is owning things is easier. And when the clutter and when things come into your house, then it becomes a challenge. For example, if you have 30 shirts for me, imagine if I have 30 shirts with me, and if I have to decide whether A I should wear, or B I should wear, or C I should wear, or D I should wear, my happiness quotient is going down. And because of this confused decision making, I am also wasting my time. So it's a two-way. Hence, if you look at the greatest people, as in whether it is Mark Zuckerberg, whether you look at Steve Jobs, whether you look at most people, they have one colored shirt, same, 6, 7. So you don't have, because every time you take a decision and that decision leads you to some bit of unhappiness, you should avoid that decision. Make things simple, avoid the leakage. There is another concept which we have put in the book that is leakage is essential. So leakage is essential. So till now I spoke about why leakage is punitive. Now I'm talking about why leakage is essential. So there is always a price you have to pay for your happiness. So 1%. So there is a rule of 99-1. What is that 99-1? We have, Koushik and I have given in the book, the rule of 99-1. What is that 99-1? 1% leakage happens in every system because you can't be perfect. If you try for perfection, perfection can be very, very expensive. Very, very expensive. You will end up wasting a lot of time and the opposite party may not even appreciate that. So perfection is very expensive. But 1%, that 1% is the leakage cost or the price you're paying for peace. That 1% is the greasing cost, is the cost which is all right. So don't go for the last mile. Get it done and move on, because if you keep looking for that 100% perfection, then there is a problem. So 1%, sometimes what happens is people keep looking for that last dime. Forget about it. Move on. Your time is more precious and your time is limited on this planet. So that's what.
Great. And like although it has been explained that be it the reader age of 14 years of age or an old person with 70 plus, the life lessons are more or less same, and the book is conducive enough so as to make them understand the nuances of all the facets of life. But again, I would want to know if somebody is a beginner in the investing thing and financial planning, and somebody who has some experience. So the book goes well for both the readers, or there is some segregation on this concept.
Sure. So here what we have done is, for a beginner, the chapter 4 first part very clearly talks about the role of saving. And if he moves on to the and if he moves just the first part of the chapter 4, and then he moves on, as Kaushik also rightly said, is on the ninth chapter, or which is after the story is over, and then the learnings, which is the financial planning aspect. So for someone who's between 14 years and 25, 30 odd years, that first part of the chapter, who has zero knowledge about stocks, zero knowledge about equity markets, for him, the first aspect of 14, of fourth chapter and the ninth chapter becomes very critical, because he learns the nuances of savings. Why saving is critical? How do you save? Should you have life insurance? Should you have mediclaim insurance? If yes, what is the percentage, etc., etc. So we have gone into the financial planning detail. But somebody who is already an astute investor, who understand businesses, who understand companies, there he should look at the second half of the chapter 4 and then the annexures. Chapter 4, second half, talks about the formula, the in-depth analysis of the formula, which Kaushik just now explained, all the 4 legs of the formula, and then back testing those formula through the years, in which is put in the annexures. So that is relevant for somebody who is an astute investor and wants to cross-check. And will want to put that portfolio, that formula, and check his current and existing portfolio or next portfolio he wishes to create with the cash he's sitting on. So it's relevant from both those aspects as well.
Great. So everyone, I mean, when it takes what it take and how does one reach that unique position laden with responsible wealth, good work, and happier relationship? Because what I've seen is, as you were also discussing in the beginning of the session, that creating wealth is not a guarantee of bringing in success and happiness in your lives, right? So that fine balance, how I mean we can achieve that, if you can touch upon few nuances. Although I know that more of it should be gained through reading through the book, but again, few nuances if you would like to talk about.
It's really a great question, Prince. But a small point I'll add over here. Prince, everyone for their own specific. For example, like my life is more onto equity side, and I'm managing money or like what as a research analyst or something. Like for example, other people in the call would be like more onto another profession. So this book is like for everyone who is on a different perspective to come onto their investing, and they don't want to spend a lot of time. They have very less time for anything for the other part. So that's how the expertise has been created in this book. So if a person wants to if he's in some other life, for example, he's into his profession is an engineer, like he cannot spend more time over here, so then he can run our formulas and then he can start investing. And yeah, again, it's like at least knowing which company is investing is more important for him, so that will be like taken care over here. And the second part, I think Siddharth sir can take it.
So Prince, you spoke about the relationships. Now, what relationships always lead to wellness. And I'm reading a quote from the book, which is on chapter, which is in the chapter 7, and it's 183 page, and the quote is: "Wellness starts with financial well-being. Wellness starts with financial well-being, covers physical and mental wellness, and ends in emotional and spiritual abundance." Now, how does this happen? So, very, very simple. If somebody has to have happiness in relationships, one needs to figure out, one needs to measure, and we have put the happiness quotient formula in the book. And it's very, very simple. Now, at least Koushik and I, we believe that what cannot be measured cannot be altered. So you necessarily need to measure if you want to alter the situation you are in. 90% of the times what we do is we have things in our mind, because mind is a great servant but a very, very bad master. And when mind takes over, it takes us all over the place. So what you need to do is write down, because when you're writing down, then you can't fib. While talking, you can fib to yourself, to anyone else. But while writing, you can't fib. And hence we have given a happiness quotient. Now, one of the measures of the happiness quotient is, during the year, have you learned any new skill? Because we all understand that we have synapses in our brain, and those synapses, when they multiply, and when one acquires a new skill, and one utilizes that new skill, it gives a new high, and that leads to happiness quotient. Another, have you acquired new friends, new well-wishers during the year? Number of times you have made yourself proud for the work you have done. When you feel happy that you have done some extraordinary work. Similarly, and there are the whole 8, 9 more of them. Similarly, there are happiness diminishers. The illness acquired during the year. What happens because of this constant work, constant rat race? When we go to a diagnostic center and something untoward comes in our face, which we have never anticipated, what happens? We immediately take corrective measures. We take pills. It seems to be cured. We are all right. We change little lifestyle and bingo, go back to the rat race. But we don't understand that one illness acquired is actually reducing our wellness quotient. Similarly, how many negative people or the cribby people you met? Generally, more negative or cribby people you meet. And we all like to gossip, but we don't understand that gossip and cribbing reduces our own happiness quotient as well. And we attract the way we are. So if you meet and crib and find negativity in anything and everything, automatically, at the end of the day, you are only filling yourself with a poison. That person has poured the poison, you have multiplied that poison, and that poison has gone in your stomach. There are times when you are going through very, very rough times and tough times. Have you compromised on your morality? Have you compromised on your ethics? Now, a lot of people say, kya farak padta hai? Chalta hai. Everything moves on. But when you do that compromise in ethics and morality later in life, when you realize, when you sit down, do you feel nice about it? The answer is absolutely no. So these are happiness diminishers. On the other side, if there are tough times and if you stand up for your ethics, for your morality, there will be even further pressure. You will succumb sometimes to those pressures, but you bounce back. And when you bounce back, you emerge as a winner. So what are we saying? That to get those highs in life, you have to start measuring these happiness quotients, happiness questions. And we have put all of them. And similarly, for the relationships, we generally, which are the relationships which are most abused in our lives? The most abused relationships in our lives are the ones which are closest to us. Look at the way we have treated, I'm not saying everyone is bad. Generally, whom we take for granted? Our parents, our spouse. Do we behave the same way with our superiors? The answer is no. Do we behave the same way with our vendors, with our customers? The answer is no. And the very fact that they don't care for us, but we want to be our best selves in front of the people whom we don't care for and who don't care for us. And we are the worst in front of the people who love us most, who care for us most. Is that fair? So these are certain things which we need to think for. We can't tolerate anything which our near and dear ones sometimes say. Whilst in our professional places, even if our sometimes superiors, sometimes our colleagues, sometimes somebody influential passes some remarks, says something, we tolerate it gladly because it can impact our career, it can impact our financial prosperity, it can impact. But do we behave the same way when somebody which is very near and dear to us says something, but we don't empathize with them? We are all right if the external world says. So these are certain softer concepts which we have written, which can thicken our relationship. And this is a book after chapter 7, you should read with pauses. And if you think it is touching your life, make notes what you have been doing and what is the course correction. Because if you read this book just as a novel and not gonna change anything, the outcome will be zilch. The idea is read, make those notes, implement those changes and monitor and measure. And you will see that you will achieve, you will be 100x of yourself. Financially, physically, emotionally, and spiritually.
Great, sir. So a common question before we close for the day. So basically, what it takes to bring in financial discipline in our lives.
Koushik, you want to say?
So
Well,
my
yes, sir.
question to both of you is like how we can bring in success in bringing discipline to our financial lives. I mean, financial discipline rather.
Prince, I'm still in the beginning stage on this part, though, for sure.
Okay. Okay, I'll cover that. I'll cover that. So the simplest way of doing it is the financial discipline is the first thing. Debt is bad. If you are taking debt for OPEX, this is the same thing which applies to the companies and this applies to your lives as well. If debt is taken for OPEX, operating expenditure, it is bad. If debt is taken for CAPEX by the companies or for your financial, in your lives, it is great. So if if you're taking debt and then creating an asset which is appreciating and revenue generating, it is great. So please, please, please do not take debt for gratification, for buying goods and services which may diminish in value or diminish your value, both the things. Diminish in value of the product or the services over time or in you. For example, if you have, it's a very silly example. If you're taking a loan and you are gonna go and have fun at Las Vegas and you're gonna take that money and drink. A, what will happen? Obviously, you are traveling. B, you are spending money on travel, which is for leisure. And second is drinking, which is gonna be spoiling your health. So in both the ways, it is detrimental. So that is one. On the other side, if you are creating a real estate, if you want to create a house, if you want to have an asset which can be given on rent, where you can have earnings out of it, fantastic. Why not? Take debt. Why should you think of buying a house when you're 40 or 45? The first house you should plan early so that you have a longer time frame. So that's number one. Number two is, first you should start saving and then think of spending. First, you should start thinking of saving and then spending. What does this mean? It very simply means that when we get some income, whether we are employed or whether we are, in our business, we have a certain cash flows which come to us. What do? We first do the spending and then whatever is residual. Sometimes there is no residual and sometimes there is little bit. Then that is the amount which we invest. Why shouldn't you do that? The spending or expenses is a very simple thing. If you have less expenses, then also you'll manage through the month. If you have more, then also you'll manage through the month. It's about the psychological barrier. So what you should do is very simple. Remove the amount what you have thought about in the beginning of the month. As soon as your salary, as soon as your cash flows come, you should remove that as a saving. And after that, whatever is the residual, you should spend. And that's the discipline you should maintain. So that's number two. Number three, and this is very, very, very critical. Every year, you get some bonuses, you get some increment. Now think about it. Last year, if your life situation has not changed, if your life position has not changed. So imagine if you're not married last year and if you're not married this year. If you didn't have kids last year and if you don't have kids this year as well. Which means there is no change in the life situation or the life position. Then why should your expenses go up when your income goes up? What does this mean? That imagine you have a salary of 2 lakh rupees per month. Now you got an increment of 15%, so your salary has become 2,30,000. Why should your expenses go up by 15%? No, they should remain the same. Your expenses should remain the same. Your savings should increase. And whatever bonus, whatever extra windfall you have got, maybe 5% or 7%, you can use it as your, enjoyment, etc. Balance, you should invest. Balance, you should save and then invest. Because remember, if you start getting into that discipline today, automatically, you will win at a later point in time. And the fourth thing you and everyone, Prince, you have a lot of financial literacy, but unfortunately, one aspect which I would also request, there are a lot of men or a lot of male listeners who are listening to you. Unfortunately, there aren't any women or very limited women listeners to this program or to to the spaces. And the unfortunate part is the male population and the female population in the world or in the country is approximately 50-50 or 50.5 and 49.5 male to female ratio. Think about it. 98% of women do not make their financial decision, do not take their financial decision, have no understanding of financial, the investment savings or what should they do with their money, irrespective of whether they are working or not working. And the unfortunate part is either their spouses, either their brothers or fathers generally assist them with the investing or with the savings. And when something goes wrong in the family, then it's the lady, is the mother, is the wife, is the sister. That's the person who suffers, the daughter who suffers. So the another thing which you should do is make sure that women take that financial literacy. They should take their financial decisions. Because if the mother is educated, the child will get educated. So please, for all the men who have girlfriends, who have women as their partners, who have wives, who have daughters, please make sure that you teach them what you are learning right now. So that's the fourth aspect. And the fifth aspect,
I have a small
remember,
addition over here for Siddharth sir, what point he is making out. Sir, if possible, please share the link or the once again, please retweet over here the video which this example was taken there. I think you were part of that, right? Please share that in the description also once again.
sure, I will. I maybe should I share it with the
Please share it with Prince so
with
that Prince can add as a tag for this. And this is a live experiment what we are talking about. We are not making as something that we are expecting or something like we are thinking and we are coming up with it. This is a live experiment which has happened. And that will be shared. It will be very soon on your tags here. Yes, sir. Go ahead. Go ahead.
Sure. And the last aspect of everything boils down to discipline and monitoring. At the beginning of the month, are you keeping a track of your expenses? And you will feel just track your expenses for 3 months. 3 months. And you will understand how much wasteful expenditure can be curbed just by monitoring it and by tracking it. Just do it. Make an Excel sheet. Whatever you are spending, whether it is anything which is in excess of 50 rupees, just put it in that Excel. Once you start tracking it, you will see that automatically your expenses are down. Your expenses are down by 18 to 19 odd percent. Every month you will reduce it. And that's the power of monitoring, and that's the power of constantly seeing where you are spending. So these are 5 things which I would strongly recommend to anyone, whether you are at the age of 14, 15, or you are at the age of 45, or whether you are at the age of 65, you should do it. And if you'll start doing it, you will get great revelations about your spending pattern. And remember that even if you're at 65, don't start thinking that I have to think about my children, grandchildren. First, you start living your life and spend money, but spend money for your wellness. Because who knows, maybe you will live till 100. And if you live till 100, then automatically you will require a lot of money to sustain yourself.
Great, sir. So, sir, I would request for the concluding remarks and wherever, I mean, obviously, Amazon link I have already pinned for my audience. But again, if there are other places wherein the people can get in their copies, so definitely you can tell that to them. Yeah.
So the book is available at all the bookstores at all the whichever cities you are in. It is available at all the bookstores. It is available at all the websites as well, from the Flipkart to the Bookstore to all the other websites. It's available across the world as well. So you can order from any of the websites. It's available, and once you have bought it, we would love to hear back from you, because the idea of writing this book is honestly not to do anything else but to empower those 99% people like myself who are not privileged, who are not born with a silver spoon, who are ordinary people yet dream of becoming big, dying rich, and making sure that they are successful. And we, Koushik and I, we both want that all of you should reach your peak potential. So please, after reading the book, we will be obliged. It will help us. It will help us to think and rethink and get ideas. How should we be able to make this country the best country, and with all of you being prosperous and be full of life, as well as having the highest wellness quotient forever for you as well as for your families.
I would just add another point. Every point or every writing or every letter in this book has been experimented. Like you will see the live experiments what has been conducted, and the live talks which have been conducted, and the kind of discussions that we had, and everything has been penned on here. I think, like, for me it is one of a selfish thing. I have it for myself. Like, I partnered with Siddharth sir to reach for my own 100x for my own life. So that's how it is helping me. Like, penning on each and everything in the book is like a very great experience that we had it for the last 4.5 years plus. So I would be very happy if people can give us the feedbacks and help us get a lot of understanding or more and more on the deeper concept also. We would be love to hear from you all. You can change anything as per your own. There is nothing called as a fixated formula for everything, right? So you can change the aspects to your own situation, and then you can try your own way what it is working out. And that's what we want from everyone on this thing. Thanks, Prince, for this.
And I've
Great.
posted this. Sorry, Prince. I've posted
Please,
this.
please go ahead. Yeah.
Yeah, I've posted this on the small experiment which was done about the women, and it was interesting that it was found that almost 98% of the women don't take their financial decision. I have posted that link. It was a study which was done. If you guys want to see, you can see it. I just wanted to say that.
Great, sir. And our audience can surely connect with the handles of Siddharth sir and Kaushik for getting in touch with all the great knowledge shared over their handles. And it was great to have you guys and hear from you directly about your book. And definitely, I and our audience look forward to the great learnings in the book and wish you a ton of success with that book. And we sincerely believe that we all grow 100x in all the facets of our life.
Thank you, Prince, for your kindness, for your generous words, and wishing all of you 100x in your lives, and may you succeed in all your endeavors and be the best version of yourself and enable 100 more